Hi, welcome to the Market Alert for Tuesday, the 18th of June 2019. So yesterday we see bonds, Bitcoin, tech stocks and dollar jump as US macro data dumps ahead of the Fed FOMC tomorrow evening. So let's have a look. The markets, basically what they're saying there is are quiet. If we look at the daily chart, you can see that we're stuck in this sideways range. Very narrow range for yesterday. The market trading up to the 76% retracement that we drew in for yesterday's alert, but the market waiting for the FOMC news. When we look at this in a bit more detail, the pattern at the moment of ramping the markets in the pre-market session seems to have disappeared, which obviously makes sense as the market waits to see what Powell is going to do. So in the pre-market session, market finding support and then eventually breaks to the downside. Market finds support at the major psychological level there of 26,000. Am I correct there? Yeah, 26,100 that is. And then prices rally back up and then close back below the 200 bar and head into the main event, where we then see the usual tussle, buying pressure, and then the market reversing there. The shorts liquidating, pushing the market higher, and we only really trade back up to the 200 bar moving average and the high of Friday's session there, which you can see many tops there, triple tops, quadruple tops, as the market then moves sideways to lower by the end of the session. And currently the market again attempting overnight to get above the 200 bar but failing, and currently below this and all three averages at the moment. So expect a bit of a bounce in this unless they're going to mark the market down, ready for tomorrow's news. Super Mario's speaking at 9 a.m. this morning, out again, and Carney's out as well at 3 p.m. They're bringing them all out at the moment to try and keep the markets on the upside there. Meanwhile, in the pound, this not doing a lot either. The market moving lower again yesterday as the prospect of Boris Johnson looms. The pound not liking this and heading below the 125.58 level there. Bit of a bounce on the overnight, but again not a lot happening. And this as the dollar moved higher yesterday, the pound moved after the main session, but otherwise it was just stuck in a sideways range yesterday. Very narrow range as well, from this low to this high was only 33 pips there, so very quiet. And Bitcoin maintaining the Sunday evening up move. We can see this here still above the 9111 at the moment. A bit of profit taking coming in here at this time, and again you can see prices there maintaining the uptrend at the moment. And in the 15-minute for yesterday, once again you'll see prices having a few punts to the upside. There is a sell straight down to the 200 bar moving average, and then they buy back and bring the market back. And overnight the markets are putting in that double top resistance there, some selling coming in, and the market's currently below the 200 bar moving average with some selling there. So what I'd be looking for here is the market to come back up and see how it gets on at the 200 bar moving average. It may go through and then come back, and then come back once more to the line, and then see a bit more profit taking. Otherwise it will need to drive through with some buying, pull back to the 200 bar moving average, and then move back up that way. So we'll see how the market responds to that. And implied volatility 1343 for Friday. Monday 1344, so just slightly. Deutsche Bank, not a bad day for Deutsche Bank yesterday. In fact, we'll look at the chart here. You can see the market gapping higher but then coming back and filling it. So still all is not well with Deutsche Bank there. You can see coming back to fill that gap, and still below the 200 bar moving average as well. So that's about it. There was one thing that I did want to bring to your attention inside of here. I think it's also keep in mind this week as well that we have the quadruple witching on Friday. So that's when we see the options, the futures, the stock futures and the options on shares roll over from June to September. Can you believe that already? And yeah, so watch out for that on Friday as well. That will be after, of course, the FOMC meeting. But there was something I was in this article that I wanted to bring to your attention, which I thought was quite good. But as ever, when you want something, here we go. This is what I was after. While the market is less confident of a rate cut this week, it is practically convinced the Fed will cut in July. And then this is a bit of sarcasm here. As sure of that as it was sure that the July meeting would prompt a rate hike back in November. So, the November meeting said there was going to be a rate hike in July, and now we're looking for a rate cut. So I think the consensus is the Fed are not going to do anything in June and may turn dovish in July. So we'll see how that pans out. But that's what the market's waiting for at the moment, and we'll just have to wait and see how this pans out. But these roundups here in Zero Hedge are really, really good, and just to get an idea of what's happening in every single sector of the market, be it bonds, stocks, all of these things. Volatility is a great resource, and they seem to be posting these most days now, apart from the adverts, of course, but someone's got to pay for it. So there we go. That will do it for this one's Tuesday. Nothing really happens on a Tuesday as a rule, but now I've said that, no doubt something will. But don't forget Draghi and Carney out today as well. See what impact that has on the market. It's anything that will move it, so we'll see. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.